Based on the provided data for Bitcoin, a bullish investment strategy appears promising. Price history shows an overall upward trend, with recent fluctuations around the $67.00 to $69.00 range. The forecast price also suggests continued growth, peaking around $69.400 in the coming week. This positive outlook, coupled with the support price of $65.858.01, indicates a strong foundation for potential gains. Therefore, I recommend a long-term investment strategy with an entry point around $67.00. A stop loss at $65.858.01 would protect against significant downside risk, while a target price of $69.400 allows for capturing the potential upside projected by the forecast. This strategy capitalizes on the bullish momentum and aims to benefit from the anticipated price appreciation of Bitcoin in the medium to long term. Based on the provided Ethereum price data and forecast, a cautious short-term investment strategy appears most suitable. The historical price data reveals a volatile trend with a recent downward movement, while the forecast suggests a slight rebound in the coming week. The overall direction remains bearish. The current price is hovering near the support level, indicating potential for further downside. Therefore, a short position on Ethereum is recommended. An entry price around $2,530, slightly above the current support level, would allow for some room for potential price fluctuations before entering the trade. The stop loss should be set at $2,580, above the entry price, to minimize potential losses. The target price should be set at $2,440, the next significant support level, aiming to capitalize on the anticipated price decline. This strategy prioritizes risk management and aims to profit from the short-term, bearish momentum in Ethereum. Based on the provided data for Ripple, a cautious short-term investment strategy appears most suitable. The historical prices show a recent downtrend, with the forecast suggesting further declines in the coming week, while the support price at $0.4996 offers a potential floor. The resistance at $0.5245 indicates limited upward momentum. Considering these factors, entering a short position near the current price of around $0.517 seems prudent. To manage risk effectively, a stop-loss order should be placed at $0.532, slightly above the current price, to limit potential losses if the market unexpectedly reverses. The target price for this short position could be set at $0.5, aiming to capture a portion of the anticipated decline. This strategy capitalizes on the bearish sentiment indicated by the price trends and forecast while implementing risk management measures to protect against unforeseen market movements. Based on the provided information about Solana, a short-term bullish investment strategy appears to be the most suitable approach. The historical price data reveals a consistent upward trend, with the current price hovering near the support level of $167.52. This suggests a strong foundation for further price appreciation. Forecast price indicates a continued upward trajectory, projecting a rise to $182 within the next week. This aligns with the historical price trend and supports the bullish outlook. Therefore, a long position is recommended. An aggressive entry point could be $170, capitalizing on the current price proximity to the support level. A stop-loss order should be placed at $167.52, aligning with the support price, to minimize potential losses. Target price should be set at $177.36, the resistance level, aiming to capture the anticipated price increase. This strategy allows for potential profit from the expected upward momentum while managing risk effectively. Given the current price trends and forecasts for Cardano, a cautious investment strategy would focus on a short-term approach. While the historical prices show some volatility, the forecast suggests a downward trend over the next week. The price is currently hovering near the resistance level, indicating potential for a pullback. In this scenario, a short position is advisable to capitalize on the anticipated decline in prices. A suitable entry price for this strategy would be around $0.347, aligning with the current price and the forecasted decline. The stop loss should be placed at $0.365 to protect against any unexpected price surges. The target price should be set at $0.322, slightly above the support level, allowing for a reasonable profit margin while mitigating the risk of further downside movement. This strategy takes advantage of the short-term bearish outlook for Cardano, aiming to profit from the anticipated price decline. Based on the provided price data for Filecoin, a cautious investment strategy suggests a short-term approach, capitalizing on the anticipated price fluctuations. The historical price shows a downtrend, with the forecast indicating further declines in the coming week. The support price is at $1.7331, while the resistance is at $1.979. This indicates a bearish outlook in the short term. Therefore, a short position is recommended to profit from the potential price drop. A suitable entry price would be $1.90, slightly above the current price, allowing for some room for price correction before entering the short position. The stop loss should be set at $1.98, just above the resistance level, to limit potential losses if the price unexpectedly moves upwards. The target price could be set at $1.70, aiming to capture a significant portion of the anticipated decline. This strategy prioritizes risk management while seeking to capitalize on the bearish sentiment in the short term. Given the price trends and forecast for Filecoin, a cautious investment strategy would focus on a short-term approach. The historical prices show a fluctuating trend with a slight downward bias in the recent past. The forecast suggests a continued decline in prices, with Filecoin potentially dropping from its current level towards the support price. The support price of $3.503 acts as a crucial level to watch, as a break below this level could signal further downward movement. Considering these factors, a short position on Filecoin appears to be the most suitable strategy. An entry price around $3.65 would allow you to capitalize on the potential price decline. The stop loss should be set at $3.75 to minimize potential losses if the price unexpectedly rises. The target price should be set at $3.45, aiming to profit from the anticipated downward movement before reaching the support level. This strategy allows for a short-term investment opportunity while managing risk effectively. Given the price trends and forecast for Theta network, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the current price near its forecast and below the support level of $1.138. The resistance is at $1.247, indicating that a significant upward movement is unlikely in the near term. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. For an aggressive short-term investment strategy, an entry price of $1.26 would be ideal, aligning with the current price and the forecasted price decline. The stop loss should be set at $1.3, protecting against any unexpected price recovery. The target price should be set at $1.14, slightly above the support level, allowing you to take profits before the market hits major support. Given the price trends and forecast for Dogwifhat, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend over the past 2 weeks, with the current price near its lowest point in the recent history. The forecast indicates further declines in the coming week. The support price is at $1.511, suggesting a potential floor for the price. The resistance level is at $2.566, indicating a significant barrier for upward movement. Considering this outlook, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $2.40 would allow you to enter the trade near the current price, while a stop loss at $2.50 would protect against unexpected price surges. The target price could be set at $2.30, aiming to capture potential downside momentum before reaching the support level. This strategy prioritizes risk management and capitalizes on the bearish short-term outlook for Dogwifhat. Given the price trends and forecast for Stellar, a cautious investment strategy would focus on a short-term approach. While the historical prices show a slight upward trend, the forecast indicates a period of consolidation with limited upward momentum. The current price is near the resistance level of $0.095, suggesting that further gains may be limited in the short term. Therefore, a short-term short position is advisable to capitalize on the potential for a price pullback. An entry price of $0.0945 would allow you to enter the market near the current price. The stop loss should be set at $0.095 to protect against any unexpected price surges. The target price should be set at $0.0925, aligning with the support level and allowing you to take profits before the price potentially rebounds. Based on the provided price information for Starknet, a cautious investment strategy with a medium-term perspective appears most suitable. The historical price data shows a fluctuating trend with recent downward movement. The forecast suggests further declines, indicating a potential bearish trend in the near future. However, the support price of $0.3748 provides a potential floor for the price, suggesting a possible rebound in the medium term. Therefore, a long position with a conservative approach is recommended. The entry price should be around $0.376, slightly above the support price, allowing for a margin of safety. The stop loss should be set at $0.36, below the support price, to limit potential losses. The target price could be around $0.41, aiming for a moderate gain based on the historical price range and potential for a rebound. This strategy aims to capitalize on a potential bounce back from the support level while managing risk effectively. The current price of PENDLE is hovering around its support level of $4.347, suggesting a potential for a rebound. The forecast price indicates a slight upward trend over the next week, reaching $4.75. Considering these factors, a long-term investment strategy appears promising. Therefore, I recommend taking a long position on PENDLE with an entry price of $4.35. Set a stop loss at $4.25 to minimize potential losses if the price dips below the support level. Aim for a target price of $4.93, which aligns with the resistance level and the forecasted price movement. This strategy capitalizes on the potential for PENDLE to recover and appreciate in value over the long term. Based on the provided historical price data and the forecast for render, a cautious short-term investment strategy appears most suitable. The historical prices demonstrate a downward trend over the past 2 weeks, with the forecast indicating further declines. The support price at $4.563 suggests a potential floor for the asset, while the resistance at $5.207 indicates a significant barrier to upward movement. Given this context, a short position would aim to capitalize on the anticipated price decrease. An entry price of $4.80 would allow for a potential profit while minimizing risk. The stop loss should be set at $5.00 to protect against any unexpected upward price movements. The target price should be set at $4.40, slightly above the support level, allowing for a reasonable profit margin while accounting for potential price fluctuations. This strategy emphasizes a cautious approach, leveraging the downward price trend and forecast while mitigating risk through a well-defined stop loss. Given the provided price history and forecast for VeChain, a cautious medium-term investment strategy appears most suitable. The recent price action shows a downward trend, with the forecast suggesting further declines in the coming week. However, the support price at $0.022 offers a potential floor for the price, indicating that a significant drop might be unlikely. Therefore, a long position is not recommended at this time. Instead, a short position could be considered, aiming to profit from the potential price decline. An entry price around $0.0233, slightly above the current price, would allow for a small margin of safety. The stop loss should be placed at $0.02339, just above the recent resistance level, to limit potential losses. The target price could be set around $0.0213, aligning with the support level and reflecting a moderate downside potential. This strategy allows for potential profit while mitigating risk by setting clear entry, stop loss, and target prices. Based on the provided information about Binance Coin, a medium-term investment strategy appears to be the most suitable approach. The historical price data suggests a fluctuating trend with a slight upward bias, while the forecast predicts a short-term consolidation around the current price levels. The support and resistance levels indicate potential for further upward movement in the medium term. Therefore, a long position is recommended. An entry price around $590 could be considered, aligning with the current price and providing a buffer below the immediate support level. The stop loss should be set at $582 to protect against unexpected price drops. Target price could be set at $606, aiming to capitalize on the potential upward movement towards the resistance level. This strategy allows for participation in the potential upside while mitigating risk through a well-defined stop loss. Based on the provided price information for Conflux, a short-term bearish strategy appears to be the most suitable approach. The 2-week price change shows a downward trend, and the forecast predicts further declines. The current price is hovering near the support level of $0.1344, suggesting that it might be vulnerable to a downward break. Additionally, the resistance level at $0.1821 is quite distant, indicating limited potential for upward movement in the short term. Therefore, an investment strategy for Conflux should involve a short position. A suitable entry price would be around $0.145, aligning with the forecast and providing a margin of safety above the support level. The stop loss should be set at $0.152 to limit potential losses if the price unexpectedly rebounds. The target price could be set at $0.134, aiming to capture the potential decline towards the support level. This strategy capitalizes on the bearish sentiment indicated by the price trends and forecast, while also incorporating risk management measures to protect against potential market reversals. Given the historical price data and the forecast for Worldcoin, a cautious investment strategy is recommended for the short term. The 2-week price change shows a downward trend, and the forecast predicts further declines. The current price is hovering near the support level of $1.705, indicating potential vulnerability to further downward pressure. The resistance level of $2.464 is significantly higher, suggesting an uphill battle for the price to recover. Therefore, a short position on Worldcoin is advisable for a short-term investment. An entry price of $2.25 would allow for capturing potential downward movement while minimizing risk. A stop loss at $2.35 would protect against unexpected price surges, and a target price of $1.85 would provide a reasonable profit margin before reaching the support level. This strategy aims to capitalize on the anticipated price decline while mitigating potential losses through a well-defined stop loss order. Based on the provided information for Avalanche, a cautious investment strategy is recommended. The historical price data reveals a fluctuating trend with a slight downward bias over the past 2 weeks. the forecast suggests a continued downward trend, with prices potentially reaching as low as $25 in the coming week. Considering these factors, a short position appears more suitable. The current price is above the support level of $23.82, indicating a potential for further decline before finding support. An entry price of $26, aligned with the current price, would allow for immediate participation in the anticipated downward movement. The stop loss should be placed at $26.5, slightly above the current price, to limit potential losses if the price unexpectedly rebounds. The target price can be set at $24, aiming to capture a portion of the projected decline while staying above the support level. This strategy prioritizes risk management and aims to capitalize on the anticipated downward price movement of Avalanche in the short term. Based on the provided price history and forecast for Jupiter, a medium-term investment strategy appears to be most suitable. The historical prices demonstrate a general upward trend, with recent fluctuations suggesting a period of consolidation. The forecast indicates a continuation of this upward trend, albeit at a slightly slower pace. This suggests a potential for gradual price appreciation in the coming weeks. Therefore, an investment strategy involving a long position in Jupiter is recommended. A conservative entry price could be around $0.995, aligning with the recent price action and the forecast. A stop-loss order should be placed at $0.978, just below the strong support level identified at $0.9793. The target price could be set at $1.0599, the identified resistance level, aiming to capture potential upside momentum. This strategy allows for participation in the anticipated upward movement while managing risk through a well-defined stop-loss. The provided price information for EOS suggests a bearish trend in the short to medium term. The 2-week price change shows a downward trajectory, and the forecast indicates further declines, while the support price at $0.4381 offers a potential floor for the price. The resistance at $0.4628 suggests limited upside potential. Considering these factors, a short position on EOS appears to be the most suitable strategy. To execute this strategy, an entry price of $0.450 could be considered, aligning with the current price and the forecasted decline. The stop loss should be set at $0.4628, above the current price and resistance level, to protect against unexpected price surges. The target price could be set at $0.430, slightly above the support price, allowing for a reasonable profit margin while mitigating the risk of a deeper price drop. This strategy capitalizes on the anticipated downward momentum of EOS in the short to medium term. TRON shows a slight upward trend in its historical price data, with recent fluctuations hovering around the $0.16 mark. The forecast price suggests continued upward movement, peaking around $0.168 in the next week. Considering the current price, support level, and forecast, a long-term investment strategy appears promising. Therefore, an investment strategy for TRON should involve a long position. An entry price of $0.162 would allow you to buy in near the support level, while a stop loss at $0.159 would protect against unexpected price drops. The target price could be set at $0.168, aligning with the highest forecast price, allowing you to capitalize on the anticipated upward movement. This strategy takes advantage of the bullish momentum and aims to profit from the potential price appreciation of TRON in the medium to long term. The provided data for C suggests a bearish trend. The 2-week price history shows a consistent decline, and the forecast predicts further downward movement. This bearish sentiment is further supported by the fact that the current price is below both the support and resistance levels, indicating a lack of strong buying pressure. Given this analysis, a short position on C appears to be the most suitable strategy. To execute this short-term strategy, an entry price of $0.43 would be appropriate. aligning with the current market price and the downward trend. A stop loss should be set at $0.453, the highest price point in the recent history, to limit potential losses if the price unexpectedly rebounds. The target price for this short position could be $0.367, the lowest predicted price in the forecast, allowing for a potential profit from the anticipated decline. This strategy capitalizes on the prevailing bearish sentiment and aims to profit from the expected downward movement of SE in the short term. Provided price information for Shiba Inu suggests a cautious approach to investment. While the historical prices exhibit some volatility, the recent 2-week price change indicates a downward trend. The forecast price also projects further declines in the short term. This bearish outlook, coupled with the price currently close to the support level, suggests that a short position could be more beneficial than a long position. Therefore, an aggressive short-term investment strategy for Shiba Inu would involve entering a short position at the current market price, which is slightly above the support level. The stop loss should be set slightly above the current price to minimize potential losses if the price unexpectedly rebounds. The target price should be set at a level below the forecast's lowest point, allowing for a profit margin while acknowledging the potential for further price decline. This strategy aims to capitalize on the anticipated downward momentum in Shiba Inu's price over the next week. Given the historical price data and the forecast for Dogecoin, a short-term bullish strategy appears promising. The recent price fluctuations demonstrate volatility, but the overall trend shows a gradual upward movement. The forecast predicts continued growth, suggesting that Dogecoin might climb towards its resistance level of $0.1740 $2. Therefore, an aggressive investment strategy would involve taking a long position on Dogecoin. A suitable entry price would be around $0.142, aligning with the current price and the support level. To manage risk, a stop-loss order should be placed at $0.138, just below the support price, to limit potential losses. The target price could be set at $0.155, aiming to capture a significant portion of the potential upward movement predicted by the forecast. This strategy capitalizes on the anticipated short-term price surge while mitigating potential downside risks. Given the price trends and forecast for Hooked Protocol, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the current price hovering near the support level of $0.3805. The forecast indicates further declines, suggesting Hooked Protocol could drop towards $0.396. This indicates a bearish outlook in the short term, making a short position the most suitable strategy to capitalize on the anticipated decline in prices. For a cautious short-term investment strategy, an entry price of $0.412 would be ideal, aligning with the current price and providing a buffer against potential upward fluctuations. The stop loss should be set at $0.42 to protect against any unexpected price recovery. The target price should be set at $0.385, slightly above the support level, allowing you to take profits before the market hits major support at $0.3805. This strategy aims to minimize risk while still capitalizing on the potential for a short-term price decline. Given the price trends and forecast for Aevo, a cautious investment strategy would focus on a short-term approach. The historical prices show a general downward trend, with the current price hovering near the support level of $0.3168. The forecast suggests Aevo could continue to decline, reaching as low as $0.315 in the coming week. The resistance price of $0.3454 indicates that a significant upward movement is unlikely in the near future. Therefore, a short position is advisable to capitalize on the potential for a price decrease. An entry price of $0.330 would allow you to enter the trade near the current price, while setting a stop loss at $0.340 would protect against any unexpected upward movement. The target price should be set at $0.300, aiming to profit from the anticipated decline towards the support level. This strategy emphasizes risk management and capitalizes on the short-term bearish outlook for Aevo. Given the provided price information for Coin, a short-term investment strategy appears most suitable. The historical price data reveals a downward trend, and the forecast predicts further declines over the next week, while the support price at $0.006595 suggests a potential floor. The resistance at $0.007351 indicates limited upside potential. Therefore, a short position is recommended to capitalize on the anticipated price decrease. An aggressive entry price of $0.0073, slightly above the current price and near the resistance level, allows for a quick entry into the trade. A stop loss at $0.00769, slightly above the recent high, helps to limit potential losses. The target price should be set at $0.0066, slightly above the support price, allowing for a profit-taking opportunity before the price potentially rebounds. Given the price trends and forecast for Coin, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the forecast indicating further declines. The support price sits at $0.0162, and the resistance is at $0.01807, indicating a bearish outlook in the short term. In this scenario, a short position is advisable to capitalize on the anticipated decline in prices. For a cautious short-term investment strategy, an entry price of $0.0175 would be ideal, aligning with the forecasted price. The stop loss should be set at $0.0180 to protect against any unexpected price recovery. The target price should be set at $0.0160, allowing you to take profits before the market hits major support at $0.0162. This strategy aims to minimize risk while potentially capturing some of the anticipated price decline. PEP's historical price data reveals a fluctuating trend, but the forecast suggests a downward movement in the coming week. The price is currently hovering near its support level, indicating a potential for further decline. Considering this bearish outlook and the price forecast, a short-term investment strategy focusing on a short position appears most suitable. An entry price around $0.00000985 would allow you to capitalize on the anticipated price drop. To manage risk, a stop loss order should be placed at $0.00001010, slightly above the current price. The target price could be set at $0.00000900, aiming to capture a portion of the predicted decline. This strategy prioritizes risk management by setting a stop loss and focuses on short-term gains by taking advantage of the expected price movement. Given the price trends and forecast for Coin, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the forecast indicating further declines. The forecast suggests Coin could drop from its current price to as low as $4.76, while the support price sits at $4.753 and resistance at $5.359. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. For an aggressive short-term investment strategy, an entry price of $5.15 would be ideal, aligning with the current price and allowing for potential downside movement. The stop loss should be set at $5.25 to protect against any unexpected price recovery. The target price should be set at $4.80, slightly above the forecasted lowest price. allowing you to take profits before the market hits major support at $4.753. Based on the provided historical price data and forecast for Bitcoin Cash, a cautious investment strategy with a medium-term perspective appears most suitable. The historical price shows some volatility, with recent fluctuations ranging from $347 to $369. The forecast suggests a slight downward trend in the coming week, reaching a low point around $353. However, the support price at $321.3 provides a significant buffer against further declines. Considering this information, a long position with a strategic entry point near $355 would be advisable. This price point offers a potential entry before the predicted dip and allows for a margin of safety above the forecast low. The stop loss should be placed at $347, protecting against a potential drop below the recent lows. Target price could be set at $368. Aiming to capture a potential upward movement towards the resistance level. This strategy balances risk and reward, allowing for potential profits while mitigating potential losses. Given the provided price history and forecast for Chainlink, a cautious medium-term investment strategy appears most suitable. The historical prices show a consistent downward trend, with a recent dip to $10. This aligns with the forecast, which predicts further decline in the coming week. However, the support price at $10.56 suggests a potential floor for the price. Therefore, a long position is not recommended at this time. A short position with an entry price of $10.80, just above the current price, could be considered. The stop loss should be set at $11.00 to limit potential losses if the price unexpectedly rebounds. The target price could be set at $10.20, aiming to capitalize on the predicted decline, while leaving room for market fluctuations. This strategy aims to capitalize on the short-term bearish momentum, while acknowledging the potential for a bounce back near the support level. The recent price history of Polkadot suggests a period of consolidation, with a slight downward bias. While the forecast indicates further declines, price is currently hovering near its support level of $4.024. This proximity to support, coupled with the relatively low forecast price of $4.01, suggests a potential for a short-term rebound. Therefore, a short-term long position could be considered. An entry price of $4.08, slightly above the support level, would allow for a margin of safety while still capturing potential upside. The stop loss could be set at $4.024, the support level, to limit potential losses. The target price could be set at $4.327, the resistance level, aiming to capitalize on a potential upward move. This strategy aims to take advantage of a potential short-term bounce in Polkadot while managing risk effectively. Near Protocol's recent price history reveals a downward trend, with the forecast indicating further declines. The historical prices show a consistent downward trajectory, with the current price hovering near the support level of $4.287. The resistance at $4.609 suggests limited upside potential. This bearish outlook suggests a short position as the most suitable strategy to capitalize on the anticipated price decline. A conservative short-term investment strategy would involve entering a short position at $4.35, aligning with the current price and the forecasted decline. The stop loss should be set at $4.45 to protect against any unexpected price surge. The target price should be set at $4.15, allowing you to take profits before the price reaches the major support level, mitigating potential losses. This strategy aims to capitalize on the short-term downward momentum of Near Protocol while managing risk effectively. Given the price history and forecast for stacks, a cautious investment strategy would focus on a short-term approach. The historical prices show a recent downward trend, with the forecast suggesting further declines in the coming week. The support price at $1.637 indicates a potential floor for the price. while the resistance at $1.816 suggests limited upside potential. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $1.75 aligns with the forecast and allows for a potential profit margin. The stop loss should be set at $1.81 to protect against any unexpected price surges, while the target price could be set at $1.65, aiming to capture a portion of the predicted decline. This strategy prioritizes risk management and aims to profit from the short-term bearish outlook for stacks. Given the price trends and forecast for Aptos, a short-term investment strategy appears to be the most suitable approach. The historical prices show a slight downward trend over the past 2 weeks, and the forecast indicates further declines in the coming week, while the support price at $8.56 provides a potential floor for the price. The resistance at $9.73 suggests limited upside potential. Therefore, a short position is recommended to capitalize on the anticipated price decrease. An entry price of $9.32, aligning with the recent price action, would be appropriate. The stop loss should be set at $9.53, slightly above the recent high, to protect against any unexpected upward movement. Target price could be set at $8.87, which represents a reasonable decline based on the forecast and historical price action. This strategy aims to profit from the short-term bearish sentiment surrounding Aptos while managing risk through a well-defined stop loss. Based on the provided data for Litecoin, a short-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend, with recent highs around $74 and a slight dip towards $68. The forecast indicates a consolidation phase around $70, suggesting limited upside potential in the near future. This sideways movement presents an opportunity for a short position. Therefore, a conservative strategy would involve entering a short position at $70, the current price and the predicted average price for the next week. The stop loss should be placed at $71.21, the resistance level, to minimize potential losses if the price unexpectedly rises. The target price could be set at $67.02, the support level, aiming to capitalize on the predicted consolidation and potential for a slight downward movement. This strategy leverages the anticipated price stability and offers a defined risk-reward profile for a short-term investment horizon. Given the price trends and forecast for Uniswap, a cautious investment strategy would focus on a short-term approach. The historical prices show a volatile trend with recent fluctuations, while the current price is relatively close to the forecast. It's also near the resistance level. This suggests a potential for a short-term correction. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. For a short-term investment strategy, an entry price of $7.85 could be considered, aligning with the current price and recent fluctuations. The stop loss should be set at $8.06, slightly above the resistance level, to protect against any unexpected upward movement. The target price should be set at $7.40, which is below the support level, allowing you to take profits before the price potentially rebounds. This strategy aims to capitalize on the potential for a short-term price correction in Uniswap while managing risk through a defined stop loss. Given the Bittensor price trends and forecast, a cautious investment strategy is recommended. The 2-week price change shows a downward trend, and the forecast indicates further declines. The price is currently near its support level, suggesting that it may be oversold. However, the resistance level is relatively high, indicating that there is limited upside potential. In this scenario, a short-term short position is advisable to capitalize on the potential for a price decline towards the support level. An entry price of $530 would be appropriate. aligning with the forecasted price. The stop loss should be set at $545 to protect against any unexpected price recovery. Target price should be set at $490, slightly above the support level, allowing you to take profits before the market hits major support. This strategy aims to capitalize on the short-term bearish momentum while minimizing potential losses. Given the Internet Computer Price data and forecast, a cautious investment strategy focusing on the short term seems appropriate. While the historical price shows some volatility, the forecast indicates a downward trend over the next week. The support price at $7.651 acts as a potential floor, while the resistance at $8.345 suggests limited upside potential. Considering this, a short position is recommended to capitalize on the anticipated price decline. An entry price of $7.90, slightly above the current price and below the resistance level, allows for a buffer against potential upward fluctuations. The stop loss should be set at $8.05 to minimize potential losses if the price unexpectedly surges. The target price could be set at $7.50, aligning with the forecast and providing a reasonable profit margin before reaching the support level. This strategy aims to take advantage of the short-term bearish outlook while mitigating risks with a well-defined stop loss. Given the price trends and forecast for Artificial Superintelligence Alliance, a cautious investment strategy would focus on a short-term approach to manage potential risks. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. The support price sits at $1.205, indicating a potential floor for the price. However, the resistance at $1.358 suggests limited upside potential in the near term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $1.32 would allow you to enter the trade near the current price, while a stop loss at $1.36 would protect against any unexpected price surges. The target price should be set at $1.19, slightly above the support level, allowing you to take profits before the market hits major support. This strategy aims to capitalize on the short-term downward momentum while mitigating potential losses with a well-defined stop-loss order. Provided price information for Optimism suggests a bearish short-term outlook. The 2-week price change reveals a downward trend, and the forecast predicts further declines over the next week. The current price is hovering near the resistance level of $1.728, indicating potential for a pullback. Considering these factors, a short-term short position strategy appears most suitable. An aggressive short-term strategy could involve entering a short position at the current market price, around $1.72. The stop loss should be set at $1.78 to limit potential losses if the price unexpectedly rises. The target price could be set at $1.54, aligning with the support price and allowing for a significant profit margin if the bearish forecast plays out. Given the Ethereum Classic price history and forecast, a cautious short-term investment strategy is recommended. Price has been relatively stable around $18, with a slight downward trend in recent weeks. The forecast predicts continued declines, suggesting a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on this potential price decrease. An entry price of $18.50 allows you to enter the trade slightly above the current price, providing a buffer against immediate price fluctuations. The stop loss should be set at $19, safeguarding your investment against any unexpected upward price movement. The target price should be $17.50, aligning with the forecast downward trajectory and offering a potential profit margin. This strategy prioritizes risk management while aiming to capitalize on the anticipated price decline. Ethereum Name Services price history shows a downward trend over the last 2 weeks. The forecast also indicates further price declines over the next week, suggesting a bearish outlook in the short term. Given this trend, a short position on Ethereum name service appears to be the most suitable strategy. To implement this strategy, we can enter a short position at $16.50, aligning with the current price and the forecasted price. The stop loss should be set at $17.18. The resistance level, to limit potential losses if the price unexpectedly rises. Target price can be set at $15.85. The support price, aiming to capture the anticipated decline in price. This strategy capitalizes on the bearish momentum and aims to profit from the potential price drop in Ethereum name service. Based on the provided historical prices and the one-week forecast for Solana name service, a cautious medium-term investment strategy appears most suitable. While the historical price data shows some fluctuation, it generally trends upwards. However, the forecast suggests a slight decline in the coming week, indicating a potential period of consolidation. This suggests waiting for a pullback to a more attractive entry point rather than jumping in immediately. A potential entry point could be around $0.24, slightly below the current price and above the support level of $0.2318. This provides a buffer against immediate downside risk. The stop loss could be set at $0.232 to limit potential losses, while the target price could be set at $0.26, aiming to capture the upside potential if the price resumes its upward trend. This strategy allows for a balanced approach, minimizing risk while still aiming for reasonable returns in the medium term. The historical price data for Aave suggests a period of consolidation and sideways movement. While there have been fluctuations, price has largely remained within a relatively narrow range. Forecast price indicates a slight downward trend in the coming week. This, coupled with the current price being close to the support level, suggests a cautious approach. Therefore, I recommend a short-term neutral strategy, given the limited downside potential. A short position might not be the most profitable choice. Instead, waiting for a clearer signal of a trend reversal before considering a long position would be more prudent. This strategy allows you to avoid unnecessary risk while staying prepared to capitalize on potential opportunities as the market develops. Given the price trends and forecast for Injective, a cautious investment strategy would focus on a short-term approach to capitalize on potential price fluctuations. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. While the support price sits at $18.03, the resistance is at $19.24, suggesting limited upside potential. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $19.00 would be ideal, allowing you to enter the trade near the resistance level. The stop loss should be set at $19.24 to protect against any unexpected price recovery. The target price should be set at $18.00, slightly below the support price, allowing you to take profits before the market hits major support. Based on the provided price history and forecast for Polygon, a short-term bearish strategy appears to be the most suitable approach. The historical price data shows a downward trend over the past 2 weeks, with the forecast projecting further declines in the coming week. The support price sits at $0.3201, while the resistance level is at $0.3652. This indicates a limited upward potential in the short term. Therefore, I recommend entering a short position at $0.335, slightly above the forecast's lowest point. The stop loss should be set at $0.340 to protect against any unexpected upward price movements. The target price should be set at $0.310, aiming to capture potential downside momentum before the price reaches the support level. This strategy capitalizes on the anticipated bearish trend while managing risk through a well-defined stop-loss order.